All right, we have 3 trading days left of 2022. Are we going to finally get that Santa Claus rally? Well, you might be discouraged because we didn't get it last week. And a lot of people expect, that week of Christmas to get some kind of a rally. But actually, the Santa Claus rally isn't supposed to happen until the last 3 trading days of the calendar year. And it goes into the next trading year with the first 2 days of that calendar year. So we're right at the cusp of seeing whether or not we're going to get that Santa Claus rally. It definitely didn't happen today. We were down 1.4% on the NASDAQ. We were down about 0.4% on the S&P 500. And the Russell 2000 was also down. So whether it was large caps or small caps, they were all down. And we got to see from a technical standpoint, how are we shaping up for 2023? Are we going to retest those lows again before we finally get some kind of hope at a bottom in the stock market? We're going to go look at the technicals. We're going to go through the S&P, the NASDAQ. We're going to go through the Russell 2000. I'm going to go through some of my indicators and just look at where some of this weakness has been throughout this year. But first, before I do that, make sure you click on the join button down below so you can get all of my members only videos that I send out each and every day. It's like a couple each day. You're going to get watch lists. It's really good stuff. And you're supporting this channel and the process. So let's go ahead. Let's look at these charts here. First up, S&P 500. We're going to use the SPY ETF. I'd be remiss if I didn't bring up this decline trend line. Guys, this thing has been potent all year long. Nothing gets past it. We almost got past it on December 13th with that CPI report. Tried to break above it. It did initially opened above it, but the rest of the day it spent its time getting back below this decline trend line. Outside that one moment, it hasn't even pushed above it on an intraday basis. So one time have we even violated it. And ever since then, the market's really just trended lower. So you got this double bottom, or this double top actually, on the S&P 500 on SPY, right? That has confirmed with this break of support. But over the last 7 trading days, it really hasn't done much. It's really just traded sideways, and that can be frustrating. It's not unexpected, though, because I would say in my experience, the last 2 trading weeks of the calendar year is some of the most frustrating times to trade. I have scaled it back over the years quite a bit, just knowing how frustrating it can be. The breadth gets all wonky. You don't really have any clear edge one way or the other. So what I have right now, that's kind of what I'm planning on right now, taking into the end of the year and then reassessing at the beginning of the new year. I may be trimming some profits along the way where the opportunities are provided to me. But also look at this on SPY, though. I think it's worth bringing up. Maybe we have a bear flag pattern that's forming yet again. If you look at it, it kind of makes sense. We had a couple of down days that led to a new leg lower on SPY. Now we're getting a bit of a bear flag pattern. If this confirms to the downside, then what we want to start looking at is support levels like the previous lows in November. And then, of course, the lows that were established in October. I think it gets really, really bad if we break those October lows, because that's where I think you're going to see a lot of people start throwing in the towels. Like, look, we spent the last 3 months trying to build off of those October lows, and now we just gave it all back up and we're even worse than we were before. That can create panic for a lot of traders. The next chart that I want you to look at is the Qs. We had this bear flag pattern. This was a much bigger bear flag pattern, went all the way back to October, and the market was doing a fantastic job of forming this pattern. And in the last video, I said, guys, look at this. Look at these candles. It's trying to hold on to this bottom channel of the bear flag. Maybe we get a bounce. Maybe it goes all the way back up to this 300 level again, and then before it sells off again to complete the bear flag pattern. But no, it didn't do that. It gave you a little bit of a hope there with this particular candle here, and then the next 3 days it has just been pushing lower. So the Qs are much weaker than what you're seeing in the NASDAQ, or what you're seeing in the S&P 500 right now. The NASDAQ is really what's driving this market lower with the implosion with Tesla and the continued weakness out of Apple. It's just really, really ugly. So with the NASDAQ 100, we've got this bear flag pattern confirmed. So the next thing happens, are we going back down to the October lows? At this point, I kind of expect us to, because we're not that far off of it. We're trading at 263 right now. The October lows is 254. So you're really only talking about 3 or 4% before we're back at the October lows. That can happen in a day, or probably not in this environment with the really light volume, but it's very possible that happens sooner rather than later. And then on IWM, what do we got going on here? Well, you got that topping pattern, that one confirmed to the downside. You also have this bear flag pattern trying to form as well, similar to the SPY. So 7 days in consolidation, trying to break to the downside. If it breaks to the downside, it actually creates for me a decent reward risk ratio if you're one's looking to short it. So for me, I probably use like a 1-to-1 ETF or just short IWM outright. But for stop loss purposes, I'm looking at the highs of December 21st, last Wednesday. That would be about 176.80. And then to the downside, if it broke below Friday's lows, that would definitely be a break below and out of this bear flag pattern. That would occur at 172.34. So you have about a $5 to the upside for risk, and you have the potential for a retest. I think that's where my target would have to be, a retest of this 163, 162 level on IWM. So that gives you about $10 to the downside, $5 of risk, about a 2-to-1 reward risk ratio on that particular trade. Now remember, IWM, if it does test this level, you got to take it serious, because this is the only index that has not broken those June lows on a closing basis. So if it tests it, and I would expect there to be some kind of buying that materializes out of a retest of this massive support level that goes back to the June lows. And finally, let's look at the VIX, because the VIX has a decline trend line off of October highs. And so far, it has rejected price action that has gotten up to this decline trend line. And let's be honest, VIX has been really wonky over the past, I don't know, month. I mean, you keep thinking that it's going to break through this resistance, especially with a lot of the weakness that we've seen, but it's really gone nowhere. In fact, looking at it from just like a monthly standpoint, it's barely up on the month. So it hasn't really quite done what the bears expected it to. That's been a bit of a divergence where it should have been going up as the market was sinking lower, but it didn't really do that. Oftentimes that can be attributed to the low volume too that we're seeing from this little seasonal time of the year. Also, if we do get a breakout of this decline trend line, then you got to watch this 34 level, because this is where a lot of your sell-offs reverse on the S&P 500, is when the VIX touches this 34, 35 area right here. You can see we've had a lot of action right in this area. So keep that in mind as we continue to weaken. That could come into play, especially if you get a bit of a panic sell out of the market. T2108, this is the percentage of stocks trading above their 40-day moving average. Right now it's at 37%, so we're not looking at any major extremes right there. If it gets into the single digits, like what we saw back in October, like what we saw back in June, that's where you see a lot of major market reversals that can last for a few weeks, if not a couple of months. So we don't know what these next few days are going to hold. It may result in additional selling, especially as a lot of people are looking to offload some of their losing positions on the year, because let's face it, it's been a really bad year for a lot of traders. In fact, if we go ahead and just look real quick at the sectors by year, where is majority of this weakness at? Technology, 37% down on the year. You got discretionary down 34% on the year. The next weakest sector, real estate, down 26% on the year. The fourth worst is communications at 13%. So there's a big gap between the top three and everything else. There's actually three sectors that have traded higher. Energy traded 48% higher, and then you have utilities and you have industrials just barely scraping in the green right now. But if 2023 is going to turn around, you have got to get technology and discretionary to turn around as well. And right now we're not seeing any signs of that just yet. As traders, our job is not to pick the bottom. It's very tempting to. But if we're going to trade, we can't necessarily look at it from the standpoint of, oh, I got to hit the bottom here. We're just really trading patterns, whether they're short-term, long-term. We're trying to take advantage of opportunities that provide a good reward-risk ratio. If it happens to be at the bottom, then that's great. Maybe there's a bigger return as a result. But our job as traders is to look for opportunities to trade, not necessarily be the hero and time the bottom. If you enjoyed this video, I would encourage you to like and subscribe to this channel, and make sure to hit that little notification bell so you can get notified every time I do one of these videos. Make sure to click the join button down below so you can become part of the YouTube membership here on this YouTube channel. And tell me down in the comments below, do you think we're going to bottom in 2023? And if so, what month are you expecting it? I don't really have anything, but I know a lot of you guys do, so I'm always curious to hear what you guys have, what your theories are, what your hypothesis is. Thank you guys, and God bless.